Hey, it's Mack with PriceActionTradingSystem.com. It's Monday, it's August 10th. This will be our chart lesson for today. And really strong trend today. This is pretty typical of what you'll see when you get a big spike up like this. This is just too steep, and prices are rarely going to maintain a trend of that angle. Um, and so what happens, it kind of flattens out to a more 45-degree angle and then looks like a more normal and healthy trend. And you can see that. And notice all these little bitty bars that keep going higher and higher. This is a strong trend. It doesn't look like it, but it's a real strong trend. And when you see this either up or down, really you're just looking for reasons to enter. You got to be a little bit careful when you get trades that are right into the high like this one. If you'd have entered here, even though there's even what looks like a failed second entry short, you go long right there and you don't have room to get out, and it backs up and it comes down here and it makes a failed break lower below these lows, and it bounces off the lower trend line and it starts over again. And so you got to be real careful with that. But for the most part, if you've got room to scalp out, you just about have to take all these entries. Notice it got a little bit iffy here. Then there's a breakout pullback long there, but you're going long at the very high of the day. And then you kind of get hung up in that again. But you're looking for prices to probably come up to this higher side because they're constantly bouncing off this midline up through here. And so we're probably headed up there. But you need a good entry. And so notice I didn't mark any of these. You just don't have room to scalp out. And even though there's the likelihood is we're going up, you could always see prices come down and stop you out just before they go up, kind of like here if you got too antsy right over in here. So this is a good learning opportunity, but this is pretty typical of a strong trend that's too steep early on. It'll flatten out. And there's even there's a shorter term trend line working up here, a break, couple legs up, and then you get this correction. And this is a two-legged correction, and generally that's going to be somewhat the middle of your trend. And so you might go ahead and draw your measured move in case prices keep going higher, but you can see we didn't get anywhere near that. We continued up, but we didn't get anywhere near that measured move. The odds are we just aren't going to make it that high, especially when your trend channel is too flat. To get way up there, you got to break on through, and so then it's really going to be kind of a runaway trend, and that's not very likely. So, so the measured move really didn't help you there. You're better off sticking to the shorter term ones. As an example, I would have looked at this one and then looked at my correction right here, and you can see that's about what we got. And so that's the kind of thing you're looking for. And then notice coming down, of course you know about where it's probably going to bounce. It's probably going to bounce off this lower trend line, but you see you got a measured move there, and then it takes off again. Of course, that's all after 2 o'clock, so it doesn't matter, but that gives you a target of where to expect a possible bounce when prices start going lower here. And I'll talk about these two areas when we get to them. So, but anyway, let's back out here, make this a little bit bigger, and let's talk about the trades. Notice the double top here. You've got this would have been where I was looking for my main trend line, the first two swings. But notice this double top and this breakout pullback. It's like a breakout pullback long, and it's a little bit aggressive. It's a fairly nice bullish bar. If it would have broke lower and given you that failed second entry short, there was actually a failed second entry short here, but this was way too early. And you could have, if this would have broke lower and then turned up, I would have liked it better. But still, aggressive traders probably going to be interested in this possible breakout pullback long. Turns out to be a great trade, but of course you don't know that beforehand, and it's so close to these highs. I'm just not crazy about it, especially without a little break lower that didn't push higher. So I marked it, but it's green and it's very aggressive. So then you come up here, you make another high, and this is, even though this broke a little bit higher. This is still like a two-legged correction. It didn't even get back to the EMA. It didn't get back to the midline. But notice how you've got these matching lows across here, and there's a little double bottom. See how that one? And so this is like a little failed break lower. It's a fairly bullish bar. Um, I wouldn't have went long on a break above this one, but on this one, I would have either used a stop or dropped a limit order, maybe a tick or so back in. But you really could have used a stop on that one. But I like trying to get in back where the original entry would have been, because this is really considered your signal bar. But that's like a two-legged correction, and now you know the trend is pretty strong. It's the first break of this shorter term trend line, so prices are going to test this high, probably make a new high by a tick or so at least, but this one just keeps going. Then it pulls back and gives you a first entry, a little pull back, a second entry, but I just didn't like this entry. Look at all that overlap. That's a classic congestion or small trading range. It does take a breakout pullback long to get it going, but there's not much room before the high. There's all this overlap. They're all dojis. I just think it's too risky. And but aggressive traders probably going to take it with it climbing up that midline and bouncing off of it every time. So there is a second entry long, breakout pullback type entry there if you wanted to be aggressive. There's another breakout pullback long here when prices broke above that. Again, it does bounce off your midline, but again, there's just not much room there. You're going long at the very high of the day, and it's just real. And you see what happens. It would have worked just by the skin of your teeth, and then it turns and backs up. So it's just not really worth it. And notice how we didn't get up here to this high either time. That's a concern as well. So it's like it's losing momentum. Doesn't mean the trend is ending. It just means it's losing momentum, and that's not necessarily a bad thing because the trend was too steep, and now we're getting more of a more healthy trend started. But you got this little channel working down. You get a break. You don't get a new low yet. But I don't see any reason to want to go long right here. You're looking for prices to pull back and test this low. There's 3 bars stacked in a row, a doji. None of them closed on their high. I think that's too risky. Notice it does make a little breakout pullback long. But again, there wasn't enough room to scalp out there before you got to that high. And guess what? It breaks up and comes down. That's why I was leery of this one. And telling you, at least this one you had a little more room than you do right here. You're going along right into the highs, and it backs up. And prices did come off this high, so you're really expecting prices to come back down and test this low at some point pretty quickly, or the midline at the very least. And it just kind of shoots right through the midline of the EMA and pulls back and tests it. So you don't want to you can't go short here, but you don't want to go long until you get that bounce. And that's a second entry. Notice this new high, pull back. There's a first entry, pull back, second entry. That's a nice bullish bar. Just go long above that one. It pulls back. And this one's really tempting, but this is your signal bar. It's too bearish. I really thought we'd test this trend line again just to double test it, but it didn't happen. We turned and went up. This is a really bullish bar, but it's so close to that high, and there's not much room before you get to that high. It's almost okay to mark aggressive, but in the end, I just think it's not worth it because you might end up just like you did right here with another run back down to this trend line. And so I think you're better off to wait. And then we just kind of went into this, but notice this is a double top, so you can treat this like a new high or this one. There's a second entry here, but it's not back to the trend line. It's not back to the EMA. Too much overlap. But notice what happens off this double top, pull back first entry, pull back second entry. It's a failed break lower out of that little trading range. It's a second entry long, bouncing right off the EMA, right off the midline. It's kind of a little reversal bar. It's a small bar, low risk, so I like that one. It does pull back and then gives you a second entry, and again you're able to get in at the very lows of this trading range. So I like adding on there if you weren't already out, and if you weren't already in, I like entering right there. And this was a pretty quick move, and then it pulls back. This is like a little breakout pullback long, But when it didn't shoot through and it kept bouncing around, I just didn't feel comfortable entering there again. It should have gone on, but you still have all the earmarks of a fairly strong trend here because of all these little bars. And notice how it's making higher lows each time, even there. That's a good sign, but it's just risky to go long into that because you need to wait on a breakout pullback long, and that comes here. And that's a fairly bullish bar. Even though that's got a little red tint, it could have closed up on its very highs easy. It closed it, one tick from the high. It's a breakout pullback long. An aggressive trader after that many new higher lows, even though you're not making higher highs, you're making higher lows. It's building steam, and eventually it's going to break and go higher, and that's what happens. And that really was, that's about 11. That's right into the noon hour. And I don't see any way that you really want to enter right in here. Of course, there's a double test of this breakout area. So this one's tempting. But again, you got to go long right at the high of the day. And you've already had a failed second entry long and now a failed second entry low. You can't go short. If you're going to do anything, you'd want to go long right here. And that's probably worth a green circle. But I'm going to tell you, I wouldn't risk it. Even though it worked and you see it work, the next time you try it, it'll be like one of these, and it'll turn down and stop you out. So it's not worth risking it, not when you've already had some pretty good trades up through here. And then we've got this little trend working down. And now we're coming off the high, so there's a good chance we're working to the low. You get your first break here, but by the time you really get any setup, notice that little trap. It looks like it's going to be a short trap. And if anything, I'd want to go long. But look at all that overlap, all those matching highs. You really need a breakout pullback long, and you get one, but look at your signal bars. Not very good. This is just congestion, so just stay out of that. Don't risk it this late in the day, right into the 2 o'clock hour. And all it did was, if you enter there, was you got stopped out just to see it go exactly where you thought it was going to go. And so I don't recommend any entries in there. It's just too risky that late in the day, and I really didn't like these two. They're too risky. So even though it was a really good trend today, there's not a whole lot of good entries, although the ones you would have gotten were really, this one catches a runner and you can ride it. This one looked like it was going to catch a runner, but it came back. None of these really caught a runner. So it just was one of those days where you've got to take some risks to enter. And I tell people this, on days like this where you got all these little bars and just keeps going higher, just look for a good pullback and enter. And you might even consider hanging on. As long as you can, at least till you get to the upper side. Just like here, you could have held on till you got to here. Any of these you could have held on till you got to here. Any of these you could have held on till you got to here, or maybe even here. So that's the only way to trade this, because you're going to get a lot of these little pushes that are close to these highs that probably work, but you're going to get some of them that fail, like this one right here, and pull back. But if you're paying attention and you see this other channel, you know we came off the high, and it won't be long before we go back to the low. And just like here, we came off the high, it made another push up, it really struggled, but then it comes back to the low. I'm shocked we didn't break higher here and come back to the low and then go up. They like to trip people up and trick them, and that's the name of the game. So you gotta follow the rules. And but on a day like this, sometimes you just gotta look for a reason to enter and stay with it. So again, only 1, 2, 3, 4, 5 blue circles on a big trend, on a strong trend day. So, but there's just not much else you can say about it. But the main thing is, don't try to pick any tops, and just look for good pullbacks to the, two-leg second entries off the EMA, the midline. If your shorter term trend lines are in play, your main trend lines, and another thing to look for on these days are these little failed breaks lowers out of the failed break lower out of these little trading ranges. Like this one, and this one never really failed lower, but it had a little breakout pullback long, so watch for the breakout pullback longs. They generally will be a good entry. Just watch for those traps, and when you see the shorts trapped, that's when you take advantage of it. And I guarantee you, a lot of shorts got trapped right here. A lot of them started entering here, and and more of them probably entered here, and they get trapped, and look at it go. And that's why this finally shot off. That's what happens. They struggle to get it through, so they make it look like it's going to go the other way. They trap the shorts and they run it up, and then they get the momentum from all these people exiting. It runs it to a new high, and they did the same thing here. They kept, look at these big bars, and I guarantee you, traders that don't know any better are getting short every time on those big bars, and then they run it higher again. And so be wary of that. And if it's trending the other way, it'll all work just the opposite. It'll be a strong trend to the downside, and you're just looking for reasons to get short, and you don't want to be trying to go long. So again, not much else we can say about today. I mean, it was all uphill all day long, and for all intents and purposes, there's really no break of this two-tiered channel. This is a spike in a channel, even though there's nothing wrong with there's actually another channel here that's two-tier, and there's a short-term one. There's some more short-term ones in there that aren't really marked, but just keep that in mind. But I'm gonna wrap it up. Hope you had a good trading day. We'll be back again to do it tomorrow. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.